Hello, today is Saturday, August 8th, 2026. Here is your daily signal. According to Bloomberg, oil prices fell for the third consecutive day as progress toward an interim Hormuz deal was reported, with Axios noting the U.S., Iran, and Oman may announce an accord to reopen the crucial oil passage later today. The Strait of Hormuz remains a critical choke point through which about 20% of the world's oil passes, making it highly sensitive to geopolitical negotiations and underscoring its global economic importance. Past blockades and threats have caused price spikes up to 10%, highlighting why global supply chains across Europe, Asia, and the Americas depend on uninterrupted transit. Reuters reported on August 8, 2026 that the Hormuz deal led to a 3% drop in Brent crude oil prices as tanker passage was secured. Bloomberg confirmed OPEC's statement that Gulf nations would boost oil output by 700,000 barrels per day after the deal, while the Financial Times highlighted Asian logistics companies now rerouting shipments through Hormuz and reducing insurance costs by 15%. In the near term, this brings lower oil prices, improved supply chain reliability, and decreased shipping insurance premiums. Medium term, the deal may incentivize further investment in Gulf infrastructure and strengthen diplomatic relations, as European and Asian refineries adjust output strategies in light of reduced volatility. However, the risk of sudden supply disruptions remains if negotiations deteriorate, potentially reversing these early gains. Next, onto U.S. labor market dynamics. According to Fortune, job openings in the U.S. dropped to 7.36 million in June, with immigration curbs and retirements pushing the break-even hiring rate close to zero during the Trump economy. Throughout the Trump administration, immigration policy tightened significantly, contributing to reduced inflows of foreign labor, and retirements, especially among baby boomers, accelerated after 2020, impacting labor shortages in manufacturing and agriculture sectors. The U.S. Chamber of Commerce reported a 12% decline in immigrant labor force participation from August 2020 to August 2026, hurting seasonal hiring in agriculture. A Pew Research Center study found a 17% rise in retirements among Americans aged 55 and above compared to pre-pandemic levels, directly affecting labor market tightness. The Wall Street Journal noted U.S. manufacturing employment growth slowed to just 1.2% annually, citing shortages from restricted immigration and increased retirements. In the near term, wage inflation rises as employers compete for a shrinking labor pool, especially in low-skilled roles. Medium term, companies may ramp up automation and productivity technologies to offset worker shortfalls, but persistent shortages could restrain U.S. GDP growth, particularly if immigration remains limited. These demographic shifts may prompt greater political debate over immigration reform and retirement benefits. Next, let's turn to SpaceX earnings. TechCrunch reports that Elon Musk repeatedly raised expectations on SpaceX's first earnings call following its IPO, with the company doubling its revenue year-over-year thanks to notable compute deals with Anthropic and Google and growth in Starlink services. Founded by Musk in 2002, SpaceX has become a leading private aerospace player, specializing in space transportation and satellite networks, with recent financial disclosures intensifying speculation about an IPO and plans to expand operations and accelerate Mars exploration. According to Reuters on August 8, 2026, SpaceX reported $7.8 billion in Q2 revenue, about $1 billion above most analysts, and positive EBITDA, also guiding to $100 billion annual recurring revenue by year-end. Bloomberg added that Musk's post-IPO investment strategy involves broad expansion of Starlink and launch capabilities. In the near term, these strong earnings may draw more institutional investment and expedite IPO proceedings. Over the midterm, expanded Starlink deployment and launch capacity could challenge incumbent aerospace giants like Boeing and Blue Origin, while SpaceX's Mars ambitions may spur new partnerships across the public and private sectors. As SpaceX's revenue and market prominence grow, potential regulatory scrutiny could also intensify. Now, onto the markets. European markets posted gains, with Germany's EWG up 1.1% and EWQ tracking France higher by 0.6%. United Kingdom and Italy saw moderate advances, driven by EWU and EWI, and Spain's EWP rose nearly 0.6%, while Netherlands and Belgium edged up with increases in EWN and EWK. Chile's ECH was virtually flat, Australia ticked down slightly, but China large cap names led international gains, as FXI climbed 0.8%. Japan rallied, with EWJ jumping 1.8%. Indonesia's IDX surged by 2.5%, the strongest move in Asia, while India and Israel also pushed higher. African stocks soared, AFK up over 4.0%, making it today's top gainer among international ETFs. Commodities showed mixed action. Gold GLD rallied 2.2%, and silver SLV surged 2.9%, while US oil USO dipped about 0.7%. Platinum PPLT and uranium URA recorded notable rises, but copper CPR slipped 2.1%, with agriculture DBA marginally higher. The S&P 500 advanced 0.6%, with healthcare Roman 45 up 0.7%, while finance XLF eased slightly. Real estate XLRE and transport XTN moved up, even as semiconductors stocks rallied 2.0%. Among leaders, AFK was the top gainer, and USO the largest commodity loser. In favorites, Adobe ADB rose 1.9%, Microsoft MSFD was steady, Oracle gained nearly 2.5%, Nvidia NVDA jumped 2.3%, and AMD declined about 1.2%. That's it for today. You can find more news and details on our website. Goodbye.